Chairman, Chair Yellen, thank you for being here today, and I thank you for your hard work on behalf of all of America. And frankly, you have a difficult task, and one that will not get any easier before the year is out. From my perspective, I did find it quite interesting, the opening comments of my good friend, the ranking member, Mr. Senator Brown from Ohio, as he seemed to suggest that perhaps the failure of the economy somehow rests on the shoulders of my party. I thought to myself that the American people aren't really looking to assign blame for why the economy is so anemic and the so-called recovery hasn't truly reached into those folks living paycheck to paycheck. But it would be easy for them to remember that at the beginning of this so-called recovery, that the Democrats, my good friends to the left, controlled the White House, the Senate, and the House until early January 2011. And what did they do with that trifecta? Actually, they created the most onerous regulatory state in the history of our country. And it continued until even last year when the administration proposed 80,000 plus pages of new regulations, and according to the Competitive Enterprise Institute, with an economic impact or cost to the economy of $1.85 trillion. Said differently, that this anemic recovery perhaps is anemic because of the regulatory burden created during those first couple of years. And I would suggest to you that people in my home state of South Carolina who are working paycheck to paycheck do not believe that we are actually having a strong recovery, and the numbers seem to bear that out. First-time home buyers down for the third consecutive year, and that disproportionately impacts African Americans who have a home ownership around 45%. So the challenge seems to continue. Our economy grew the first quarter by 1.1%. We saw real income since 2007 decline by 6.5%. Americans eligible for food stamps is up 40%. Americans using food stamps are up over 20%. Last month, we saw 38,000 jobs created, and our labor force participation rate, 2007, 66.4%, 2010, bless you, 64.8%. You gotta stop and say thank you. Bless the woman for sneezing. Is that okay with you, sir? Thank you, sir. And in 2014, we're having fun up here because this is not a fun topic. 2014, it was 62.9%. May of this year, 62.6%. I would suggest that the numbers themselves bear out the fact that perhaps the anemic recovery is not a recovery for those folks working paycheck to paycheck. I don't know who's to blame, but I can tell you that the American people want solutions more than blame. And my question to you is, as you look for the rest of this year, do you anticipate more months where the job creation number is 38,000, and in the same months where we see job creation at 38,000, we celebrate a 4.7% unemployment rate only because 458,000 people stopped looking for work? So when you take a real unemployment number based on the 2007 labor force participation rate, we'd be at 9%.
So we do expect further improvement in the coming year. The unemployment rate fell substantially over the last year, and there were jobs created in 2015 at about 225 or 30,000 a month. Perhaps we won't see job creation now that the economy is getting closer to estimates of normal, longer-run rate of unemployment. We may not see job creation at quite that pace, but I expect continued improvement, bringing down broader measures of unemployment, which, as you noted, are much higher. Some include involuntary part-time employment. Yes. I expect further improvement, and the labor market continues to strengthen. Now, the last jobs report in the last couple of months of labor market performance were quite disappointing. My hope and expectation is that that's something that's temporary, and we will see that turn around in the coming months. Clearly, it's something we will be watching very carefully. My expectation is that we will see improvement, but we will watch it very carefully.
My last question, as my time is running out, has to do with full employment and how to reach that wonderful goal of full employment. When I look at the numbers that are coming out of the need for skilled workers as well as STEM workers, it appears that by 2020 we could have a shortfall of 3 million or 4 million folks in the skilled labor force and about 5 million in the STEM labor force. And my solution has a lot to do with the German model of apprenticeship programs. I'd love to hear if you have any solutions that you're going to be recommending as we look at the labor force participation rate, the number of skilled jobs that will be available, and the need to get our workforce trained in that direction.
So going back probably to the mid-'80s, we have seen a persistent shift in employment patterns from unskilled and people with middle skills but doing jobs that can be offshored, outsourced, to skilled, demand for skilled labor.
Yes, ma'am.
And the consequence of that has been rising inequality, a high return to education, and downward pressure on the wages of those who are less skilled and middle income. And I completely agree with you that education and training, perhaps apprenticeships of the type that are used in some European and other countries, these are ideas that really have to be considered if we're going to address what comes out of that, which is that even when you have enough jobs, you have downward pressure on the wages and incomes of people in the middle and the bottom of the skill distribution.
Thank you, Chair Yellen. Mr. Chairman, I would just suggest that at some point we're going to have a national conversation about the quality of education in our country and the necessity of a dual track. Back in my days, we had SHOP, which was an important part of our education apparatus, and perhaps we need to have that conversation again. Thank you, Chair Yellen.
I agree with you.
Senator